Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. All right, daily chart, and you can see we've been consolidating. We've been hanging around above the 9-day, which is the blue line there. The bears have had a lot of chances the last 3 to 4 sessions, you can call it 5 sessions, to convert that 9-day. I think they have their best opportunity to do that today. The 9-day is sitting up at 45.70. If they can do that, then it opens the door to the daily mid-band. We did a little bit of upper band, not a ton, and then we just kind of bled. The bands ran away, but upper band, middle band, lower band, middle band, upper band. It's the way the S&P likes to trade. You can see the green line is accelerating to the upside. That's a function of time, not really a function of price. We've been leveled off now for about 10 sessions. We are going to start to roll into the March contract late this week, early next week. March contract, this is a continuation chart, meaning whatever the front month contract is the price that's on this chart. I'll have to switch that over to the March contract when we roll, because the spread right now between December and March is about 50 handles. So that'll create a huge gap on this chart. So we'll deal with that as it comes. But just to understand, that's going to be one of the functions that the S&P Futures are going to be going through in the next 4 or 5 sessions. Now, listen, it's just an administrative function, okay? It doesn't mean that the S&P is going to pop up or gap up 50 points. I get this question I get this question 4 times a year. It's just an administrative function. It's a futures contract on an index, okay? And it's just saying it's pricing the futures 50 points higher in March than they are in December. You can take with that what you will, but for those of us that trade the actual futures, it doesn't really matter. It's just, you trade one for the other. If you're in a position trade, then you roll your current position trade in December into March if you're more of a long-term person. That's not really my thing. I'm much more short-term, so it doesn't really affect me. It just makes the charts really annoying. That's what it does for me. Hourly chart. I mean, look, there was a head and shoulders which the bears kind of blew, and then the bulls took it where you usually take these types of failed patterns, but then they couldn't hold it. The bears have had just an absolute boatload of opportunities to convert this 45-50 area to resistance. A lot of failed looks at the 9-day. Couldn't hold it here, couldn't hold it here. I mean, they really took it out yesterday. And they ended up, closing just above it. We've been below it for the entirety of Globex. What you've seen the last few days is the hourly mid-band has done a good job of holding in price. I don't really have any expectation. My expectation is that this thing's going to continue to be a pain to trade on a short-term basis. It's just been really choppy and whippy. In the bigger picture, the bears have been winning the battle the last couple of days after heading up to 4600s. It really became not bidless, but it became very heavy just before the open yesterday, and that didn't really abate until like midday, into the afternoon. But you're looking at multiple opportunities to close below the 9-day. So while I say that the bears have their best chance to do that today, they also have their best chance to really screw up too. If they can't hold this again after spending hours, it's an hourly chart, hours and hours below this 9-day, then what it's going to do is you're going to get enough long price emboldened to go up and take another look at weekly pivot up there at 45.85. If they're successful, then you start looking at the roundie, and then you're right back where you were on Friday. We're only a couple of days removed from the 4600s. So the point I'm trying to drill home here is, yes, the bears are in good shape, but only if they really execute. Now, if they can keep it down here, then you look at Wednesday and Thursday as an opportunity to kind of bleed down. Jobs is Friday, and we'll see what they want to do there, and then we kind of get into the roll and the end of the week, and And you start to wonder as we get closer to the holidays what the intentions of this tape are. I'm not guessing or speculating. You take it one key area at a time, and the two key areas on this chart right now are weekly pivot and the 9-day. The bears have done a good job of spending time and this is converted until they screw it up. They need to spend today converting this one. If they do that, then they have a real chance to go after last week's lows, and I'll expand this out. If they can break below this consolidation area, then they get to go down to the last consolidation area, which is call it 45, 45.10, 45.20. We're trading 45.63. It's not exactly Mars. You're talking about 40 handles. Very doable if they execute. So we'll see. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care. Trade them well. I would encourage you, take your profits where you find them in this tape. There are a lot of runners that are getting round tripped, and that's fine as long as you get done what you need to get done with the first couple thirds of your trade. We trade in thirds in the room, so I'll always speak in those terms. It is not a good tape to just hitch your wagon to a star on some multi-day position thing and say, and just plant your flag and say, we are going up or we are going down. It is not that kind of tape. Good luck with that. Look at all that consolidation. Good luck with that. That's not working out. Whether you're a long or whether you're a short, you've been getting whipped back into the middle. So take your profits. If you want to let a runner work, that's fine. But if something is not working, consider the other direction. And we put a lot of no trade zones out this week, and last week and the week before. Because if neither side wants it, why do you want to trade it? If they're not willing to choose a direction, why do you want to overtrade in the middle of it? Don't do it. And that's whether you're talking about a stock or an index or a commodity, whatever it is. If it's jammed in, as a short-term trader, stay out of it. Stay out of it. All right, take care. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.